after university, I worked at Bain and Company, which is where I met Simon in 1990. We started there, and after that, I worked for Schroders, the investment bank. And in 1994, I set up a business called Metropolis, which is essentially a publishing and media business, which we've grown pretty steadily over the time it's been running, partly by organic growth and partly by acquisition. Over that period, we've made about 20 acquisitions, and those acquisitions have all been really predicated on an approach which comes from the value investing style, the Warren Buffett and Benjamin Graham style of acquisitions. And we've also always looked at the stock market. And in the mid-90s, we formed an investment club where we were making investments in the market using the same sort of methodology as in the acquisitions. But more recently, we decided to turn it into a fully fledged fund based on the fact it has been successful.
Jonathan and I were associate consultants with Bain together in 1990. We worked on a couple of cases together. One specifically was quite intense in looking at the European beer industry. So got to know each other through that process, and then we kind of split at that part in our careers, because I went off to India to work for an ex-Bain manager for his family business, and had the amazing experience of being in Bangalore before it all sort of really took off. And whilst I was out there, I met an IT entrepreneur who'd come back from the West Coast, set up a software business, and I could see this phenomenal arbitrage opportunity to essentially sell offshore software engineering talent to the UK market. Everybody thought I was completely bonkers, but I came back anyway. This was sort of 93, 94. I came back and decided to start trying to see whether there was a market for this, and picked up a few clients and built a business from that. But at the same time, Jonathan was setting up his business and asked me to join the board of Metropolis and be an investor. And I did that, had a lot of faith in Jonathan as an entrepreneur, and turned out to be a fantastic investment decision. So I was, as Jonathan describes, I was involved in this share club in the late 90s that we ran together with one of the investors who's now invested in our fund, and was involved in all the decision making that went around us building up an acquisition policy through Metropolis. But at the same time building my software business as a full-time occupation, which I then eventually sold to a client in 2006, and came out of that in 2007, and was kind of thinking, what should I do next? And talking to Jonathan was clearly part of that process. And Jonathan suggested that we'd been long thinking that we could apply some of the Metropolis cash that was being generated into the markets, applying, as Jonathan suggested, the same due diligence and valuation approach that we had applied in buying the whole companies. This appealed to us, clearly, having followed Berkshire Hathaway for so long, attending his AGM for the last 8-9 years. He's got those two strands to his business, and it always appealed to us that we could leverage the same disciplines through the markets. Of course, the markets gives you that added benefit that you've got liquidity. You can buy, and if you've got the decision either wrong or the market moves in your favour, you can sell. So in 2008, we set up a small private fund with an outside investor to give us some sort of feel for what it likes to manage money, and went about the process of creating a methodology and an approach to equity investment, focused very much on the value disciplines, and having a very highly focused fund of a small number of securities, between 10 and 20 was our target, that we would do a lot of fundamental analysis on, understand extremely well, and that we believed for some reason the market had underpriced. And we would then invest in those businesses and wait for the long term until the market got it right. And that's our sort of philosophy of how the market works.